Alrighty, good morning, good afternoon, and good evening. Doc here from North America. One of those economic numbers are coming out, so we'll see if that has big influence, little influence, or no influence. And that's usually the way it rolls. Anything's possible with economic data anymore. Let's see, what do we got going on here? So you can see the Swiss on J4X is just like trapped in the middle. Did make some highs. You see that right there. And over on the, let's go into the currencies. On Chicago Quant, you can see kind of the same thing, right, let's see if we emphasize it a little bit better, like right there. You can see it's trying to lift up, did the same thing. Now it's backed off a little bit. I really don't think that they have a lot of hunger when it comes to, oh, here comes the numbers now. Let's see what the numbers look like. Let's see. We should put a stock indice up there or something like that just to get a flavor of it. Right there, there's the Nasdaq. It's still down, I guess, now at the lows of the day. Is that the lows of the day? I think 32 is lows of the day, 28. They're making some lows in there. And the S&P 500 right there, you can see they're making some lows to the day also there. Not as big. Dow Jones Industrial Average is basically flat to up a couple points. S&Ps are down about 6 points, something like that, and it's just that type of action that's going on there. You can see now they're kind of pushing it down again. We'll see if, and the lows are, where's the lows at? The lows are 07, and the futures are trading at 09. So they're just, and now 10. So they're bouncing around. I don't know if the numbers really have had that much influence yet, but we'll see. Now we'll go back to the currencies and see if they budge the currencies from that news. I kind of doubt it. Just a teeny weeny little action there. We're getting a little red-green. Oh, there was a green there for a second, as you can see. Now it's disappeared again. So the Swiss was trying to move up a little, which means obviously the dollar is firm. I think it closed in a daily buy, actually, the dollar last night. Let's just take a look at it. The ETF itself, right there. Yeah, it closed in a daily buy there last night. Let's put that in there like that. And you can see that, well, actually, it should be down below. So it went into the buy there last, you can see it was in a buy there, and it went into a sell there the day before, and now it's back into the buy last night. And we're just a little bit higher today. Again, I don't think there's a lot of noise out of this whole thing, but we'll follow it and see what it does and go from there. Let's see, let's move that. And the numbers, I guess what it was is, let me see if the core was. So it was, actual was 7 versus 4. All right, so that's what's got them a little excited. May core CPI. May core CPI 3.8 actual versus a 3.4 estimated. So there was, that a little bit greater, even more inflation than everybody was anticipating. I have a hard time believing that they're going to put that much pressure on the markets, but I think they will. Initial jobless claims. Oh, today's Thursday. That's right. So it's 376,000 versus 370. It's right around the target zone. Continued jobless claims 3.49, or basically 3.5 million versus 3.6 million actual versus the estimated. So jobless claims had drifted a little bit down. And like I said, you can see there the dollar index is definitely firmer. So, but no real excitement there. All right, so those numbers are done and over with. Monthly CPI year over year was 5 point actual versus a 4.7. So they were, all the numbers seem to be a little bit more higher in inflation than they were hoping for. And we'll just keep on marching and go from there. Now let's jump over to the euro. And there's the euro, just down a tad. It's playing with the daily sell as we speak right now. Just a little bit. And you can see the weekly. Let's expand the weekly a little bit for you. And you can see there, the weekly is, what is that? That is minus 0.00001. now it just flipped and it's now plus. Now it's just zeros across the board, going up 5 digits. Now it's -2, as you can see, bouncing back and forth in there. In fact, we should put that in there. See if we can get that going, updating style-wise. There we go. Did it do that? No, it did that. Maybe it's on 0. And then what it'll do is it'll just show us. Oh, I think it is, isn't it? We can push that over a little bit. Yeah, so you can't really see it. So it's 7 now, and I can see just the 7 on the edge there. You can't see it on the chart, but it's pushing down. We're seeing a little pressure on the euro too. Now, it looks like the stock indices have bounced back. They don't seem to be that petrified from the math. Look at that. Right there, you can see the S&P 500, which was down to 207 on the low, is now trading at 218.50, off a couple points. That's about it. Matter of fact, it's only a point. It's a half a point plus as we speak. Whereas the Nasdaq's going to have a little bit tougher time because it's a little bit more expensive, and so they need lower rates. And so the low was there of 726, and we're trading right now at 774. Wow, they bounced that back pretty aggressively. That came back, roaring back. So, all right, I guess we'll just go from there and just keep on marching along. So now, let's go back to the currencies. Oh, there's a question or two. Hey, good morning, FR33. Good morning. Let's see, what do we have going on here this morning? Hope everything is moving along to a nice weekend for you. And we're going to go jump down to the British pound. You can see right there. British pound trying to perk up a little bit. Went into the daily sell there yesterday, right there. Let's put that line in there. No, not there. Not there. Remove. I'll also remove that one too. Remove. And the buy should be right there. So let's put that buy in the right spot, like right there. And then the sell yesterday was right there. And you can see it's drifted down a little bit from it, and then now it's pretty much unchanged. You can see the weekly has broken the white line. Ooh, dipping a little bit more, touching the positive time manifold. So that's kind of the signs of weakness to come. Let's see. FR says, can the U.S. data be trusted, or is it dishonest, a new dynamic that needs to be taken into account? Well, we do a lot of, the professional traders in the States have a lot of skepticism to it. We really do. And we've had a lot of skepticism of the data for since 2008. Ever since quantitative easing, it is a distortion because, when you have the central banks and the Federal Reserve sopping up, buying weak pairs trades to keep them in line, buying stocks or opening the doorway for stocks to be bought by lending $500 million or $1 billion for free. There's a distortion. It's biased. So the data itself is definitely been skeptical. We've talked about that here for, I guess 2008 all the way up to for 12, 13 years now. We've talked about that. So yeah, you have to take the fundamental stuff and basically kind of try not to take it too serious, but know that what it's more of nowadays is it just tells you when action is coming, not necessarily if it's accurate, but just when it's coming. So in other words, you're not blindsided. You know it's coming, and then when the data comes out and they knock it down, and then you use all the tools like quantitative trading and so forth to decide, do you need to be long or short? Don't pay attention to the data itself. And that seems to be the way it rolls. Hey, Alan, how you doing? Oh, bellies. Let's take a look at them. Yeah. Live hogs, basically. They are. They've been marching along nicely. Let's see if we can throw one of them up there. Here. We'll show you. Hogs are not trading right now. They won't start for another 51 minutes, I think it is. But let's find hogs for you and throw it up on the screen. Where are they? Right there. Here is the These are the August hogs, and you can see they're up high. This is yesterday's close, and they won't start trading for another what's that, 15 minutes total. So, but yeah, we've been in a daily buy since right here. Can you see that? Let's do this. Do it on here. So we've been in a daily buy since right here, and we've been in a weekly buy since right here, and you know, it's been a nice ride. It fights, you know, not to go down. That's for sure. I think cattle's relatively the same way. Let's take a look. Would you like to see cattle, or you don't care? You know, the meats, we end up following the meat complex. We don't have a problem following that. So yeah, there's been strength in the hogs. Here's let's see, here's August cattle right there, where it's been in a weekly buy from here, you know, right there, and it's gone kind of up, but and then it would slip into a daily buy and give you a winner chicken dinner right there. You know, oh, can't see that. Okay, so it went into a weekly buy right here, and it kind of went up. You know, went into a daily buy right here, caught that move right there. But cattle has not been as exciting as the hogs. Oh yeah. We have a lot of farming clients. Bean oil, back months. Like you want to see something unique? It's kind of fascinating. Check this out. Here is soybean oil. Oop, closed the wrong thing there, but let's try it again. Let's close that. Here is soybean oil. I'm going to show you what July soybean oil looks like. And there it is right there. And it's been in a weekly buy since back in, let's see, where's it at? Right here. Back in here. It's been in a weekly buy way back here. And it's been a really interesting ride. And look at the distances between the buys and the sells. I mean, it's been very consistent and constant. And then check this out. Now this is July. Now let's look at one of the back contracts. We'll leave that one up there so you can see the difference. Check out, like, say, January bean oil. January bean oil went into a daily buy back in here. Look at that. Right back in here, it went into a daily buy. It went into the weekly buy the week before right here, as you can see. And it has not let go when it comes to the daily. I mean, it's been in a daily buy since, what is that? Since April. It's been in a daily buy. So some of these back months and spread trades are very fascinating. Our work is really good when doing that. We were monitoring the the platinum and gold pairs trade when it was trading around 1,050. You know, we put on a sell signal and traded the short side, and it fell down to 500 or like 474 or $76 from 1,050. And then we were, you know, pretty much trading the physical all the way down to the it was like the 675, and it fell another, you know, a couple $100. Now, you know, last couple weeks, here I can show you on the pairs trade. Here's platinum. Where's it at? It's interesting. There's platinum, and it's been in a weekly sell since like right here in the $1,200 area. Right, and it's fallen down to the 1120, 1140 area, and at the same time, look at gold. You know, over the same time period, has gone basically from the 1825 area all the way up to the 1920s there, 1910 area. You know, and so as platinum fell almost $100 or $80, this thing has gone up like almost $80. So it's like a $100 swing, $160 swing. So it's kind of neat. Oh, what's this cause mentioned? So soy milk is going up in supermarkets? Well, I imagine that it has to be firmer, that's for sure, because the price keeps on rising. I think soy milk is made out of the beans themselves, not the oil as much. Maybe I'm wrong. I really don't even know what soy milk is made out of. I just started drinking the oat milk, which is kind of interesting. But yeah, I'd imagine that you would see increasing prices. I think that's how that works. So if the commodity becomes more expensive, they'll do one or two things. They'll shrink the container down a little bit and charge the same price, or they'll increase the price of the container, one or the other. So I guess that's pretty much the way it goes. But I like the I like the point of view. I think that's a good one. Taking the theoretical or the practical point of view and meeting the reality, and that is a lot of us drink things like soy milk. So you would think that it's getting more expensive. That's pretty cool. I thought that was a good idea. So anyway, that's where we are now with that action. That is where we are. Let's see, what's the next thing we can look at? And we go back to the currencies. And anybody who wants to see anything, we will stop what we're looking at and just go back to to whatever you're interested in. And so where did we leave off? GBP, doing the sell thing there. And then from there, we go over to Turkish lira, right there. Still moving down, just barely touched the little dotted area we were asking for. And I guess you could say that that's officially it, done. We'll see what they do, but you can see it's in a sell here, and the weekly is trying to do the same thing, trying to go into a sell. Let's check out the Euro Turkish lira, right there. And that's been doing the same exact thing also. A couple days in a sell, not as deep though. And the euro is not really going into the weekly yet. It's damaged itself going through the time manifold here, but it's still not pushed into the sell yet. And so that's the action we're seeing there. From there, we usually, what do we do? Oh, we go to Canadian. Let's see what Canadian's doing today. Canadian trapped in that long rectangle. And a daily buy still giving red and green dots, going nowhere. Just hanging out. Look how quiet that is. We'll give it a refresh to give you a better flavor of it. But overall, just trapped in that box right inside there. And you can see the weekly is doing its best to pierce itself through. It is trading right now as we speak minus 0.00032. So it's still just by the hair of the hair. It's trying to stay in the weekly sell there. Let's see. Alan says, let's see, dollar. Was it the South African rand? What's going on? Why the large movements? Oh, I didn't. A couple of days ago we just saw it moving down. That was it. I'm not. Is there large movements going on? Let's check that out. We usually run over to there. So this is good thing. We can go check that out, and then we can go over to the metals and oil market from there. There it is right there. Oh, look at that. Last couple days, last 3 days, it's starting to perk up. Look at that. And we went to the daily buy there yesterday, but it is kind of down today. I mean, it's got a green dot and all. Let's widen that a little bit if we can. There we are. You can see there it's kind of moving back down again. So a little pop. You can see the weekly still down below. So this is more one of those dead cat bounces like the one here, where they try to pop it in a weekly sell right in here. Oop. So let's see, where's the mouse at? So you can see like right here, it's in a weekly sell. They come over to here, they play with it for a couple of days, and then bang, they go back down again. Could be a metals thing. Could be just currency translation, with the world. Notice that the dollar has been a little firm. So I mean, with the dollar a little firm, it puts pressure on the South African rand, like all the rest of the pairs trades. So it could be literally just that alone, just the natural, flow of things. So from there, we go over to, where do we go? We go to, let's see, where's it at? We go to, take a look at the metals market. And we do see the metals market, let's go find it right there. We do see gold, there it is, we have gold up there already. Went into a daily sell yesterday. You see that right there. And now look at the work is trying to go plus again. And now we're starting to flirt with the buy again all of a sudden right there. So that is what's going on there. And at the same time, they've added some data just recently. Let's just take a look at that. I'll show you what I mean by that. Because my histogram and everything was minus, and now it's trying to perk its head up into the plus. So let's just take a look at gold. Right there. You can see it was minus. It was minus. It was below the zero line. This is what we sent out this morning even. And now you can see this one was below it, this morning, and now let's look at it live. 2 hours later, it is driving back up. They're buying it, and if you notice, the South African rand at the same time is, if we widen this out and show you even more, and let's move that over like that, you can see it's moving down again. And you can see the white line heading down. You can see the histogram breaking down. Let's take a look at it on J4X. I'm sure we're seeing the same action. Or it will be coming on the J4X soon. Let's put it that way. Because sometimes J4X can be 4 to 6 hours kind of behind. But still, it's well worth using if you don't have Doc's work. Right there. Yeah, you can see the high is lower. And the Hinky Ashi is still kind of reflecting strength. This will probably roll over by late afternoon with the way we're seeing the prices. So that could be an answer to that too. Most central banks' short-term T-notes are paying negative rates due to the huge amounts of cash sitting doing nothing. Well, actually, what it's doing is, I know, it is doing nothing. It's not being lent, except for to the major institutions. What it's doing is they're using it to buy bonds and notes that nobody wants to pay for. And when you're a fund and you have like $5 or $6 billion, you need to put it somewhere. So you got to put it somewhere where you're going to get it at least back. You don't want to lose it, And so if you have to pay 1/10 of 1% to own the bond instead of you getting 1/10 of a percent or 1/4%, money managers are doing that and parking their cash that way. This way they can protect it. I know it's foolish, it's ridiculous, and so forth and so on, but you know how they resolve that? They lend those same institutions money overnight for free. So they're able to make money in something else to compensate for buying those bonds with capital. Isn't that wild? So in other words, imagine you're a fund or a bank. And when I say fund, it could be a hedge fund, it could be a trust fund, of a bank, an investment fund. And what they'll do is, if you've bought bonds and you're a good player, you follow the Federal Reserve and the central banks, they will lend you money overnight. They'll lend you even more money overnight to buy things for free. So you go out and they hand you $500 million or $250 million, depending on the size of the fund, or $1 billion. Let's imagine if you're BlackRock, they may be lending you like 20 or $30 billion. You hold that 20, 30 billion overnight because you're holding bonds that you're paying money for, and you're not making any money for it. Now you take the extra money that they've given you, and then you can put synthetic spreads on with that money, guaranteed to make money, and it didn't cost you anything. So in other words, usually when you're doing a synthetic spread, you're trying to beat the interest cost of the money you use to put the synthetic spread on. That's where the fight comes in for traders. That's where we're fighting for. So in other words, you're borrowing money at 3/8 and you're trying to make a half. So that means you're making an eighth. Okay? Well, in this case here, the central banks and the Federal Reserve are coming in and handing you that money for free. You're not paying the 3/8, and now you're putting the synthetic on for a half, and you make a half. That pays for the $250 billion of bonds you're invested in on the minus. And so go back to, who was it that said it? I think it was FR33. FR33 said something like, "Can the U.S. data still be trusted, or is it dishonest? A new dynamic that needs to be taken into account." We talk about this now for as long as I've been doing the webinars. We have to take it into account, and that's part of the game they play. And it's an ugly game as far as I'm concerned, because I remember one time I was at the swim meet, right? At a very prestigious school here in New Jersey, and I was talking with one of the history teachers. His son was a swimmer. And this is the type of school where you pay $50,000 a year for a high school. And so his son, he was a history teacher there, and so his son was going to school for free there. And so we're sitting in the stands watching the swim meet, and we're talking about something. And I was telling him, this was like 2016, 2015, something like that. And I said to him, that there was talk of making interest rates go minus. So he says, you're in the financial field. He says, what do they mean by making interest rates minus? I said, well, right now, most of the world is, there's like about 14 trillion. That was back then. There's like 14 trillion invested in zero return in bonds. And I said, so what they're doing is that you're a fund or a bank, and you buy those bonds and you pay interest. He says, you're paying interest to buy a bond. I said, yeah. That's impossible. He's a history teacher, He says that's impossible. I said, no, it's real. He said, well, it'll never happen in America. I said, it does every so often. Our T-bills go minus. No way. I said, oh, yeah, it happens every so often. So the next day or whenever we were back at the swimming pool again, up in the stands, he says, you're right, I looked it up. It's actually happening. Now, here's a history teacher. Just never knew, and if he hadn't talked to me, he would have gone no further and never looked. And so when FR33 says that, yeah, there's a lot of skepticism. Trust me, I have it all day long and talk about it here. Hence, half the reason I'm on Dukascopy is because they don't want to talk about that in the general media. They have no interest whatsoever about talking about that. They're not even remotely hungry to even think about that, let alone talk about it. And when you do ask about it, they pretend like it's non-existent. Let's put it this way: if CNN would dedicate 10% of the time on that versus hating Trump all the time, it would have been a whole different world. They dedicate no time on that at all, zero. And ABC, American Broadcast Company, spends no time on it. NBC, National Broadcast Company, spends no time on it. CBS, Columbia Broadcasting Company, spends no time on it. None. They've not done any reports on that stuff. PBS, supposedly owned by the government, the Public Broadcast Company, speaks nothing about it. Never. You never hear anybody talking about it. You only see it in snips and pieces. You don't hear it on Bloomberg. You barely ever hear about it on CNBC. You don't hear it anywhere. Reuters doesn't talk about it. It's a crime. It's truly a crime. So yeah, FR33, you are dead right. Skepticism is the answer to the whole thing, really. Alan says, Doc, where do you see all this cash ending up if rates don't go up? Let's see. Well, what'll happen is the way they keep rates down is that they just keep on printing more money, and so they buy it themselves. So it's sitting in a central bank portfolio. That's how that works. So that's really the answer to it all. So in other words, the like the ECB, the European Central Bank, or the Federal Reserve, or the Exchequer, they own tons of this stuff in separate portfolios. Do you ever see those bank? We talk about it here. There's always like a test. Someone asked us about it on here about a week ago. About do we think that, or something about do we think that the way the central banks and the Federal Reserve test the banks, and watch over them, are they measuring things correctly to keep us out of trouble? And it's like, no, they just keep on creating new money every month, and we have no idea how much they roll. Imagine when bonds expire because they came to maturity. I mean, it's 13 years now. We're doing QE, right? So that means like the T-bills will mature every 30 days, up to 90 days, and then you have T-notes that are maturing over, half a year or 2 year, and then you have notes all the way up to 7 year, and bonds that are maturing. They've been maturing now. You got to figure since QE started in 2008. The oldest, the 7 years, even the 10-year bonds now have been maturing for 3 years and being rolled. So in other words, when they mature, someone's got to buy them. They just, they don't go away. That equity has to be debited and credited on the balance sheet. And so, sure enough, the Federal Reserve rushes in, buys it under a new name, or just buys it, parks it in a portfolio, and you don't see it out in the public. There's no, every once in a while, someone seems to forget to do that, and what you see is you see a bad tail to the auction, and the markets get a little wild. And the stock markets and equity markets all get a little wild from that. They jump, and then all of a sudden the next auction is straightened out the next day, or they step in after about 3 hours and realize, hey, wait a minute, where's Grover? Grover was supposed to be buying those bonds. Where is he? Oh, he's on vacation. He is? Well, who's taking his place? Oh, nobody. Well, get down there and buy those bonds and put it in the secret portfolio. Get it done. I mean, there's rumors all over the place since like 2009 that there are more than 2 portfolios. So in other words, there's supposedly a 100-year portfolio that the Federal Reserve has. They've bought stuff like Lloyd's of London and Citibank and Deutsche Bank and things like that, and they've parked those stocks in that 100-year portfolio. And that's why Mr. Bernanke back then, in one of the testimonies in front of Congress, said, we will never see 3% on a 10-year in my lifetime. Now he's like, at the time he was like 64 years old. So you're talking possibly about 30 years, right? So he was telling us that. We hear retirees that come out of the Federal Reserve, after a while they start spilling their beans and they tell us that. Remember the HSBC and what was it? No more than 6 months ago, we had a Bank of Scotland. Bank of Scotland was like Deutsche Bank and Citibank here in the States, and Santander and Lloyd's of London and all like that. They went belly up. They're gone, like Merrill Lynch and the rest of them. They had to be married into other companies. And so Bank of Scotland, the Exchequer, owns a big block of stock, and the bank went flying up over something, over a 6-month period, about 6 months ago. So the Exchequer, out of nowhere, thought, well, maybe they'll lighten up on the load a little bit, take a profit on the position they have. So they sold 7% of the company. And people went nuts over there in England and Scotland. They were like, where does the Exchequer have a right to sell stock? They were like, where did they get the stock? That was the bigger question. People were all over the place. Were going like, well, where did the Exchequer even get the stock? It's like, guess what? They went out of business, and the Exchequer came in, bought up their stock, so it didn't go out of business. So it's kind of functioning in by name, but the big owner of Bank of Scotland right now is not the public, but the Exchequer in London. And so, or who knows, might even been the Federal Reserve might have a chunk of it in their 100-year portfolio. And so when the FR33 says, should we be skeptical? Hell yeah! Hell yeah! Oh, Lordy. All right, you got me off the soapbox. You had to crank me up, didn't you? A day before TGIF, you had to crank me up. All right, it's done and over with. I got my point out, and I've answered your question at the same time. Okay, punch them in the nose. All right, those central banks, they all have little pudgy noses right now. I punched them in the nose. All right, now let's go over to, we were looking at the South African Rand, and you can see that the gold is now, let's go back to the gold. Look at that. Gold now has got a green dot even. It's got a green dot. They've pushed so much into it, even into the clearinghouses, the central banks, that they've made my histogram and my green line come from a 0 line of last night all the way up into a plus. So they've even wiped out the daily sell now right there. They've wiped it out altogether. This is what happens when you have central banks that have paper money. And then what they do is they plow it into the clearinghouse and claim that's volume from yesterday to justify everything. That's how they do that. Then it comes into the clearinghouse. We see it up on the charts. My math picks it up. And the next thing you know, they're changing a weekly sell or a daily sell into a daily buy the next day. And I usually write that on the chart too. It's obvious. Because what's happened is they've actually added more volume to yesterday's chart. That's what they've done. All right, where else do we go from here? Let's take a look at some of the other currencies, unless someone wants to see something. We go over to the ruble. Right there, ruble's still moving down, breaking through the 72 area. It's come down from the 77 area, or high 76 area, since the weekly sell. And in this case here, right there at the weekly sell was 76, starting that week. And now we're down below 72. We've been in two long daily sells right here, as you can see. One right there went all the way to here, and then we see another one. Can you see that? You should be able to see that. Yeah, here we go. You'll see it in a few seconds on the chart. There we go. And you can see the second one right there, starting from this point, going down again. And this time it's really starting to depreciate in value, which is really what we expect with the ruble. We do think that the ruble has more value than what they usually assume it does. So, okay, from there we usually go to the South African rand, so we're not worried about that at this point. We've seen that, and let's go take a look at the crude oil. See what the crude oil is up to. And let's see, that's gold. Look at gold. Gold's even plus now, trying to get plus for the day. And it's at the highs of the day there. And I bet they're running the stock market too. Stock market is pretty much unchanged after that sell down. The central bank comes in, just buys it. What the hey? And the S&P 500 was down at 42. Where was the low? 4207. Now it is 15 handles higher. 15 handles higher, yeah. And the Dow Jones Industrial Average, which had fallen down to 34,389, is now trading at 34,582. It's almost 200 points higher from its lows. After the news came out, they knocked it down. Some magical hand came in over a 10-minute period and started to buy like it's for free. Because guess what? It is for free. And that's the wild stuff. Let's check out copper. Now copper, right, the industrial metal, if the economy's really doing that good, why is it down, right? All these electric cars, the armatures, the building materials, why is it down? So why isn't the central bank just rushing in and buying some copper at the moment? It's because they're buying gold. I wonder what silver's doing. There's silver. Now silver tried to get into the sell there. We can obviously remove that now. Let's give that a refresh. It may even blow out the red dot. So it's like a jailbreak from the central bank. Yep, look at that. Green, 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 green. Yeah, so that's marching along. It's like, let's see, it's inflation is kicking out, so obviously the metals are normally trying to rise on that, right? I would imagine Bitcoin could be showing some life. It did close in a daily buy last night. Let's go over to Bitcoin. Yep. Bitcoin trading over 37,000. Matter of fact, the high today now is 38,460. So $460. So you can see it's going on to a second day of the buying. And let's see, where is the histogram? That histogram is right there at 3.15 minus, or minus 3.5, okay? And so let's see where this one is. It's there somewhere. What is that? Is that minus? What is that? There it is. So that one is only minus 125. It's fighting its way back up. That's what it's doing here. So did the copper satisfy you? And I think there's a lot to be said about that too when it comes to the copper. I mean, supposedly all these electric cars and all that stuff is telling us, I mean, you can't build electric cars without copper for those armatures, I guess you could do aluminum, but let's see, where else do we go from here? Let's see what the 30 year's doing. Yeah, they're knocking that down. We showed that right in the morning. They anticipated that very well. Let's give it a refresh. So bonds went up, probably more to compensate for this so that they could take them down. But again, this is game. This is the game they play. They are playing this game. That's who they are, and it's not going to go away. Yeah, it just isn't going to go away. All right, what else have we got going on here? We've done the ruble, and we've done the South African rand, and oh, we didn't look at the Mexican peso. Let's check out the Mexican peso. There it is right there, the Mexican peso. Kind of unchanged, but still down. We're still in that weekly sell from here. We're in the daily sell from, is that right there? That was the daily sell right there, right? So we have to go back one. So there's the daily sell. So we're in the daily sell from there. Just double check it. Minus 0.0026, yeah. All right, so went into the sell there. It's fallen down. It's unchanged today. You know, very firm, very sideways. When you look at this product, you can see that it's been sideways, kind of like the Canadian dollar. Let's go over to J4X and look at that. You know, it's been in a sideways action now, in the same characteristics, just the way the Canadian has been. Ah, good. Thumbs up. I like that. Any feedback is always good, though, so I know that I'm providing the correct information. Now, there is the Mexican peso. That's a daily. Oh, I see. If we go like that. That's hinky-ashy, so it kind of makes it more choppier looking compared to here. I guess if we widen that out, it would have some of that characteristic too. Yeah, especially these up and down bars where we were warning you that it's gonna, probably be dead cat bounce type things, And you can see here it just looks bigger than what it is really, I guess. And that's pretty much the Mexican peso. Very impressive. I heard they had some good elections that worked out even better. Well, capitalism is sliding even more into Mexico, which is always a nice thing, That's always a very positive. Capitalism makes a society grow. Fascism, socialism, and communism destroy economies, and that's just the way it goes. All right, just history, nothing more than that. Let's go over to, let's see, we've done ruble, we've done Mexican peso, we've done the South African rand. If anybody has missed anything, just give a shout. We will go back and look at it. And then, let's see, where do we go from here? There's the currencies. I guess oh, you know what? We didn't look at the Japanese yen. Let's take a look at the Japanese yen. Now, the yen tried to get into the buy yesterday, gave us that warning of the green and red right there. And today it's moved up through it. We're in the weekly buy, so it gave us a good clear warning that there was some strength coming, and sure enough now it's confirming it. Have you already looked at the Canada? No, we have, but what's the difference? We can look at it again. We're trying to trade for money. We're not, the idea is to make money, so if you need to look at it, we'll look at it. There it is there, the Canadian. It's been trapped in that big rectangle now for over a month. Over 30 days. You can see it's stuck in the daily buy here. You can see as we speak, it is minus 0.00040. So I've limited it from just going out 5 digits on the minus side. So you won't see anything greater than 5 digits. I have a power of, the software has a power to turn off like 6, 7, 8, 9. Remember, I wrote this formula to deal with atomic particles, so I just try to bring it a little bit into the realm, but it always has the power to go out 5 digits on the minus side. I think that's funny. I'll make that piggy noise again. There we go. All right, so yeah, there's the Canadian, and it's trying to get into the daily and weekly. Well, it's in the daily buy. It's trying to get into the weekly buy now for, what is that, 2, 4, 6 days now. So we're on Thursday. So it's like what is that? Is it 6 days? 2, 4, 6. So for 5 full days, which would be last Thursday. So it's been in buy since last Thursday, Friday, Monday, Tuesday, and Wednesday, and now Thursday. So it's been pushing. Has that answered anything, FR? And I think, well, I say that, I think I'm going to have a sip of water. That's good. All right, now, what are we looking for here? So there's Canadian. I don't see anything else jumping out at us, just the fact that it's flirting with the weekly buy. And it's trapped in this big trapezoid there. I hope that answered your questions. I don't really have a stronger opinion from the charts than that. That's why we put that box up there like that too. I mean, really, it's becoming extremely obvious. Not that color. Let's see if we can make it darker color like that. There we are. I think it's a pretty obvious thing. It's kind of fascinating, the fact that it's trapped in that range. All right, let's see, where should we go from here? Let's go to, let's see, there's all the currencies. We've kind of gone through one of the ones we look at. If anybody wants to see any of them, just fire it out. We'll go back to it. I don't care if it's euro or cable or lira or whatever. It doesn't matter to me. I'll go back and look at it. And so let's jump over to the energy market. I guess we looked at the crude, right? No, I don't think we did. So you can see here crude is holding up very well. Let's give it a refresh. Crude's going on its 3rd day in a buy. It's going on its 3rd week of a buy. You know, it's holding on pretty good here. And you know, it was in a buy here. Went into a sell for 1 whole day right there, and right back again into a buy. There's definitely Aussie dollars. Check that out. You know, the crude oil is just moving along with not much fear really. All right, Aussie dollar. There we are. And you can see it fell into the sell there yesterday. We're getting a volatility signal here. Let's give that a refresh. Let's get rid of that. And let's do this too at the same time. Let's open it up on the chart we send out at night to clients. Because I try to keep them in line, but I try to keep this different color, that's all. So I'm going to make sure all the internals are the same way. Yeah, so it went into the sell there yesterday, and it's flirting with the, it's not there yet, it's still in a minus. Let's just go back over to the one we use here. Yeah, see, the same thing, it's just a color difference, that's all. So, and what we can do is for any of you out there, if you want to see the dark one, we can show you the dark one. But you can see it went into the minus there yesterday. Let's put that line in there too. Like the paying customers. Right there. And but you can see it's moving up. I guess that's because inflation is coming to America. Indeed. What else can we say about it? Well, what's caught my eye here more than anything else, notice the weekly is playing with a weekly sell. Let's look at it here. But see that, it's playing with the weekly sell, and it does not seem to be adjusting so well. You know, so it's staying underneath in the sell here on a daily, and at the same time, as much as it's up at the moment, that's why the dark chart is a little bit more emphasizing. A lot of the older traders like to see dark charts. I myself like light charts, but it's okay. It's the way it goes. And so you can see here, you know, the histogram is banging down, and we're going to go into a weekly sell if it stays like this. The strength here is a little curious. We had one of those a couple days ago, and it failed and went sliding down. So it may just join in with the pattern even more, but it's not pushing it into a buy at the moment live. How's that? A-okay, Alan? All right, now where do we go from here? Let's go over to, where do we go from here? Where were we? Let's go back to, oh, that's it. We were looking at crude oil. Let's take a look at natural gas. There it is there. Natural gas is in a sell from yesterday. Now it's trying to get into a buy. It's lifting up. Let's refresh it to see if we're generated any green or anything from it. No, still doing that. But we're in a weekly buy, so you can't take it as a short. You only can take it as a profit. The buy was here, went all the way up to there, and that's where the profit is. And now, it's trying to lift up again. All right. Ooh, here we go. We got one. Hill says, let's see. Hill says U.S. 500 index. Can we discuss? Most definitely. You ask, we will. That's the way it rolls. And we do it in line. So you're the first to ask, and so whatever you ask for, you get to see. So you can see here, we had in the news this morning, they knocked it down and made some incredibly good lows. You can see it went down to 4,207. And right now it's trading at 432. So it's moved up 25 handles. And so the strength is there, but our internals are not lifting and our weekly is not lifting. This could be a dead cat bounce. They probably plowed, the central banks probably plowed in a lot of money for free into the funds. The funds are buying it, putting in their synthetic trades. And then what will happen is that after they're run out of money, then no one will standing around looking at each other, and they'll probably, my math is trying to tell you that they want to push it down again. That's pretty much where we're at. Same thing with the Nasdaq 100. Nasdaq's not as strong. It's trading at 34 now, 35, and it went, and that's 835 or 836, and it traded down to 726. So it's 110 points higher after 10 minutes of the news was out how bad it was. And you can see here, now this is trying to get into a weekly buy, and at the same time it's holding very firm, being in a daily sell. So it's a neutral position for us. That's the way we look at that. And same thing with the S&P 500. It's in a daily sell, and it's flirting with the weekly. It's flirting with the weekly sell at the moment. We'll widen that for you. No, not that. That right there. So you can see it a little bit better. You can see right there, the histogram is minus, and the green line is minus. So they're putting some pressure on that, and that's how we read that. How's that, Cahill? All right, where else do we go from here? Let's jump over. Let's take a look at the Dow Jones Industrial Average too, since we're looking at the stock indices. Same situation happened. Dow Jones Industrial Average, we mentioned that a little while ago, fell to 34,389. Right now it's trading at 34,590 even. So it's up 2 full 100 points from the low in the last 45 minutes. And that's because the central banks, the Federal Reserve in particular, just plowed money into a bunch of funds for free and said to them, hey, hold on to this $2 billion. How about if I, Kells Hill, how about if I just call you and say, would you mind if I give you $500 million? And I'll let you know when I want it back, but you don't have to pay for it. No interest charged. And you just have to hand me back the $500 million when I ask for it. And you go, sure. Why not? Why not? And you go and put on, you're a sophisticated trader, and you put on some synthetic positions so that you can't lose the $500 million. But what you can do is you can beat the spread, and that is the carry cost spread. Because if they give you the money for free, then you can put on any spread you want, a synthetic bond, and beat zero. It's not that hard to do because they're giving it to you for free. Doc, they said Chicago Quant will be ready for day trading. Do you know when and exactly? Oh no, we're ready for day trading, but it's a little expensive. It's a little expensive because remember, we're giving you, it's like we're giving you an F-16 fighter plane with the weapons. So it gets you have the ability not to just look at, say, the S&P 500. You can look at euros, or you can look at a stock that you like, Apple, or you can look at you can look at hogs, or you can look at silk milk, or whatever. You can look at anything, and so it's a little bit more expensive. You talk to Robin, he'll give you an idea what it costs, but it's a little bit more than the 140 a month. That's the problem, because we're giving you an army. Here when we send charts out, we're just giving you like charts, and that's great. Keeps you in the game, But you would have the same power as I have right here, going through all these charts. You see something, you can figure it out instantly. You can go put it up, see where it's at. You can look at it on a 10-minute basis, or you can look at it on a daily basis. You can look at it on a weekly basis. You can do it yourself instantly on almost anything on the planet. So it's a little it takes a little practice and a little money to, not a lot. It's like it's like four or five times more a month than the it's like I think it's 4 times more a month, something like that, than the charts package. It's like 3 times, I guess. I don't know. Talk to Robin. Robin will tell you. It's right around there, and it's not in set in stone. We can work things out, but it is more expensive. That's for sure. So yeah, it would give you all the power you see I have now. It's like when you go to J4X there. Look at all the power you have. You're in J4X. You have the ability to look at all these currencies, right? And at the same time, you go, and then you have all this chance to look at all these commodities. And you have a chance to look at all these metals here, these 2 metals right there, and copper, the 3 metals. Then you have the power to look at all these stocks and things like that. So it's in different types of currency pairs of stocks, and European stocks, and so forth. So it's a much more powerful tool. So it's not like, oh well, it's like twice as good as the charts. It's like, no, it's like about 50 times better than the charts. The simple chart package. So anyway, I hope that explains that. I'm going to reset that to the Swiss. There we are. I want to see. See, there you go. See what I was saying? The Swiss would slowly start to catch up to the Doc's work. It's starting to do it now. Let's just take a look at that. All right. Is that it? No, that's not it. Yeah, I guess that would be it. We could look at it there. Yeah, see that? Right there. See, now we're getting through the plus side right there. Like we were flirting with it before. And now, finally, it's catching up. And I think on the bigger one, like right there. Yeah, see? Starting to catch up. Where we were getting through the top, it had not moved there yet. Now look at that. As I refresh my math, you can see we are flat out going up, and the dollar obviously is going up, because of the inflation factor. So, oh, it is. Yeah, it is. I've had a couple clients using it. It is. All right, where am I at? Oh, I know what it is. We're at the end. Okay, this is Doc from North America. Tomorrow is, what is it, traders? It's TGIF. Thank goodness it's Friday. All right, we will catch you all on the flip side. Happy trails to you until we meet again. Happy trails to you, to all our cyber trading friends. Aloha, traders. Aloha.